Today's episode is brought to you by FinBite Insights. So this FinBite Insight is started by Alvin, and that's me. And each day I will articulate my thoughts about the financial markets. Just by reading in less than 3 minutes, you will be able to get a very good understanding about what's the most important thing that you need to know about the financial markets for that day, and how do you interpret it so that you can make better investment decision out of it. So do remember to go to finbiteinsights.substack.com. and you can subscribe it for free and start enjoying the daily insights that I'll deliver it to your inbox. Hi there, this is Alvin from Dr. Wealth. Personally, I don't believe in making investments based on predictions because we all know predictions are not very accurate. But I know that investors always feel very uncertain about the markets, uncertain about what's going to happen in the next few weeks or months, and they generally want to look at news and try to analyze and figure out where the market is going. So sometimes I would stick my head out and give a directional view. Of course, I will substantiate with the reasons. This is one of the time where I want to share with you why I think now is a safer time to buy stocks compared to say like a month ago. So I'll be giving you some fundamental reasons, and I also will show you some chart reading to give you the technical perspective so that you have a more complete view about the markets. So let's start off with the fundamental reasons. To do that, we need to really understand how S&P has performed since the downtrend started in the early 2022. So we all know that last year it was mainly due to the fear of inflation, and of course the Federal Reserve have been raising interest rates. So that caused the stock market to really adjust itself because interest rate affects everything, including the valuations of all the stocks in the market. Then we started to see some recovery from October 2022 onwards, and until around March 2023, that was where the banking crisis happened. We saw Silicon Valley Bank fail, Signature Bank failed as well. Even a systemically important bank like Credit Suisse had to be taken over by the UBS. So given those events, now I'll give you my analysis. So first of all is that I think the Federal Reserve will continue to raise interest rate because the threat of inflation has not come down yet. It has come down considerably, but it's still far from the 2% target that the Federal Reserve prefer to be at. So it will take some time, and I would believe that 0.25% hike per meeting is more likely. There was a period where the Federal Reserve was thinking of hiking 0.5% again, increase from 0.25. But because of the banking crisis, I think that the Federal Reserve now is going to be more reserved so that they will not raise the rates so fast as it was in 2022. So with that, it is already a good news because valuation, investors, businesses have more time to adjust themselves. So I do think that the banking crisis might be a blessing in disguise. The other good news is that the banking crisis, it was quite full-blown in March 2023, and nobody knew how many more banks are going to fail. But so far, it seems like the situation is stabilizing. With the injection of liquidity and the authorities are willing to step in and prevent a systemic failure, I do think that sort of like restore some of the confidence in the banks, and we don't really hear about potential bank runs in the last 2 weeks or so. I believe that the fundamental reasons are improving, as well as the Federal Reserve is going to be more dovish as they are afraid that further rate hikes or very fast rate hike may break more things. So it is likely that if we go according to this plan, it's going to be like a more stable, gradual kind of a recovery. I believe the stocks can resume its bull run. So this is the S&P 500 index chart. You can see that the downtrend started in early 2022. That was when the Federal Reserve started to raise rates. And the S&P 500 came down in a very nice downtrend. And you can see that I drew this blue trend line to show that the peaks nicely follow a very straight line. Until in around October period, you can see that that's where it bottomed. And it staged a rebound, and it tested this trend line a few more times, right? A bit more frequent, 1 time, 2 times, and the 3rd time, 4th time, it pierced through the trend line, and this is where I deem it as probably a potential recovery, right? And another important indicator that we want to look at is this red line. This red curve is called the moving average. This is a 200-day moving average, which is considered a long-term moving average. Which means that if the prices are above this red line, means that the market is generally bullish, and if it's below, means it's bearish. So you can see for the most part of 2022, it has been bearish until this year, 2023, break out of this moving average together with the downward sloping trend line to show that there's potentially a recovery coming in. And there's another trend line that I drew over here, which is the upward sloping one that joins the bottom. As a few times it touches and it rebounds, okay, except in around March period, that was where the banking crisis happened, and that spooked the investor, and that's why it broke through the trend line. And it could have turned very bearish if the banking crisis continued to worsen. But so far, it seems like the authorities have arrested the problem, and we saw this rebound went back above the 200-day moving average, which suggests another support for this bullish trend. And again, it goes above this upward sloping trend line. So, which means that this whole trend or this channel is back into its bullish movement. So I would say that now is actually a safer time to enter as compared to a month ago. Although we can say that, yeah, if you have bought then it was so much cheaper, but we don't know it could have gone the other way around if the banking crisis get out of control, right? So now is actually a safer time to invest because the whole bullish trend seems to be resuming, right? So as long as you continue to follow this trend channel, I would believe that the bull is already back. So it is not expensive yet, considering that it is just at the bottom of this channel, and of course from a fundamental perspective there can be still stocks that are reasonably priced, right? So I don't think it's too late to enter as well. So I've given you both sides of the reasoning. One from the fundamental analysis, I do believe that the issues are a lot more moderated now. The Federal Reserve is likely to go slow on the rate hikes. Yes, it's still going to hike some more, but I do think that as long as they don't go aggressive with rate hikes, the market is prepared to take them. And second, I also went through the technicals. I show you that S&P now is returned back to the upward trend channel since October 2022. So it seems like the bull run is ready and raring to go, and we might see a better 2023 than what most investors expect. But most importantly, don't treat this as a financial advice. This is just my personal opinion. You can take it as a reference, and please do your own thinking and make your own decision. Hope you like this video. Give me a thumbs up and subscribe to the channel so that you not miss another video like this again. I'll see you around. Goodbye.